Jamaica is a highly prospective target area for different kinds of deposits in an island arc terrain.
As probably the most widespread, intensive, and in-depth exploration program that's ever been carried out in this island.
5 or 6 years worth of work into just 2.
No one else has ever done this before. There has been historic work on the island, trending back 150 years.
I think they're getting excited, as we are, so stay tuned.
Good evening, good afternoon, and good morning to everyone who has joined. Welcome to the Mines and Money Connect session on the outlook for Asia mining in 2021. My name is Greg Fournier. I'm with CIBC based in Hong Kong, and I have the pleasure to host a very distinguished and interesting panel to cover this topic. With us today is Jason Chang. Jason is the CEO and Managing Director of EMR Capital. EMR is one of the premier private equity firms globally focused on investing in the natural resource and mining sector, a lot of success. And Jason has over 20 years of experience in transactions and advisory specializing in Asian markets, investment management, and the resource sector. Edward Gustely is a co-founder and managing director of Penida Capital Advisors, an advisory firm based in Jakarta, Indonesia, focusing on emerging markets and specializing in infrastructure and the digital economy, capital restructurings, and business turnarounds. John Zadkovich is founder and director of Kingseed Capital. John has nearly 20 years of international experience in the energy sector, including oil and gas, natural resources, nuclear and renewables, infrastructure, and the finance sectors. And Ali Haji, who is CEO and director of Ion Energy. Ion is a listed company on the TSX Venture Exchange and is a leading lithium exploration and development company with projects in Mongolia. Ali has 13 years international experience in asset management, risk analysis, and program governance. So welcome, everybody. I think we got a great group and a great topic today. And I'll start with some general questions for you. And the first is really just on kind of how everyone's thinking about investment in the sector in Asia. When I kind of think of what I see, there's a lot of outbound investment by groups in Asia, particularly out of China or Japan, focused on the rest of the world in the mining sector, but less so into Asia, and I'm excluding Australia. Some countries that once attracted significant foreign investment, like in Indonesia, have seen most international mining companies exit. So do you feel Asia is investable as a foreign investor in the mining sector, and where would you focus on opportunities in the region? And why don't I start with Jason? You've obviously had a lot of experience and some great success investing in the region. So maybe I can ask you to start off with that question.
Oh, thanks, Greg. So EMR Capital, which Greg introduced as really a global mining-focused private equity fund, is based in Melbourne and Hong Kong, and for that reason, we are very focused on this part of the world. We had made a big investment in the gold mine in Indonesia back in 2015, 2016. That's in North Sumatra. So Indonesia is a country that we feel very excited about. We're continuing to look there for copper and gold primarily. Obviously, it's very prolific for both copper and gold, and coal as well. But copper and gold is very much our focus there. We like many parts of Asia, including Laos, where we had a lot of success, a decade or so ago, and that's again in copper and gold, and in Cambodia. We like Thailand, we like Malaysia, and we would look in Philippines from time to time. So Greg, I think to your point, we think Asia offers a lot of opportunities for someone like EMR and many global investors. We have a lot of support and capital from all parts of the world to be deployed in mining in these countries. And also a lot of support from the financiers, the banks as well. When we bought Matabe, we certainly had good partners, local partners, but also a lot of support from the banks. So Greg, I think to your point, we think Asia offers huge opportunities for the mining sector that is still untapped. Partly because I guess international investors are not terribly familiar with some of these countries, and they do rely on the people. There's a group of speakers and their expertise to navigate capital into these countries.
Great. Thanks for that insight. Maybe I'll ask Edward to comment, and particularly given you're based in Indonesia, have lots of experience there. And look, I think one of the issues that people have identified in Asia as creating some barriers is just the regulatory environment, and where it had been stable for a lot of years in Indonesia in particular, and that there have been changes. Earlier today, we hosted an interesting session with Kathleen Quirk, who's the president and CFO of Freeport-McMoRan, obviously a big investor in Asia, and they've had lots of success. And she commented, they've had to deal with a number of issues there. But she said patience and recognizing these are long-term assets, allows you to kind of take a very long-term view. But curious your perspectives on Indonesia for investments in the natural resource sector, mining, but in general would be helpful to hear from you on that.
Sure, I'd be happy to. Well, I've been covering and based in Indonesia for coming up 30 years now, so I guess patience is part of my DNA in many ways. I think the comments by Freeport-McMoRan is spot on. I think most of not only the majors, but the juniors, both from production and investment, can learn from that experience. I think if you remember about 15 years ago, the poster child for minerals and investment was thermal and metallurgical coal, and today it's nickel. So in all of those themes and priorities and actions that we see in this space, Indonesia still is one of the leaders in non-tariff barriers, if you will, to really being able to scale deployment both in the production and downstream capabilities. Yet at the same time, Indonesia always puts itself out there that it is open for business, and quite frankly, it is. I mean, there's no capital controls. It's done a much better job over the years of managing the environmental aspects, and from time to time, those environmental issues and regulations will be eased simply to basically open the door for that new capital formation and investment into these key minerals and elements that they look to produce. One of the key factors, though, as many of you may know, is that last January, Indonesia closed the faucet of exporting its nickel, which at that time, Indonesia was the largest exporter of nickel, and right now still sits on the world's largest reserves of nickel in the world. And part of that was the movement from mineral to market strategy that's been put in place. So a lot of the recalibration of regulations has been on how do you move to the value added side of linking your mineral production and policy with industrial policy. And what we've seen in the last few years is a movement both in changing of laws and regulations to accommodate that. And so what we see now is a combination of factors. Number one, we see the emergence of Indonesian miners who have both the scope and the breadth to scale production, and somewhat of an elimination of what we would call the junior miners at that time, who are just brokering licenses and permits. So that's a positive. We've seen the state-owned enterprises broaden and deepen and try to capture as much of the market as they possibly can. Many believe it's more of a resource squatting position that they take in order to be your friendly local partner to outside participants. And that's okay, provided that you're able to value deals and contributions, and at the end of the day, strike a deal where the goodies are divided up among those contributing. And the third element that we see is this movement again into looking at the finished end product and moving up that value chain and various aspects for participation. And we'll get into later about how nickel fits that role within Indonesia's policy of moving from selling off the family silverware to value added of its mineral resources.
Again, Edward, thanks. That's very interesting and very insightful observations on Indonesia. Maybe, John, I can ask you for some of your perspectives and maybe kind of think of some of the other kind of countries in the region, kind of how you think about investment opportunities in them.
Thanks, Greg. I think Jason and Edward have touched upon Indonesia, and indeed that was going to be one of my topics as well, one of my preferences. There has been, and I'll keep it brief on Indonesia, there has been some concerns from foreign investment as to the regulatory uncertainty surrounding Indonesia. That hasn't been helped by a persistent withdrawal from bilateral investment treaties. So the international appetite to invest in Indonesia has been tempered somewhat. That said, it's an incredibly resource-rich country. It has huge opportunities. There is some challenges with infrastructure, but by and large, Indonesia is a fantastic location for mining. Further afield, the stans, in particular, Uzbekistan and Kazakhstan, similarly, they're incredibly rich in resources, whether we're talking gold, uranium, copper, silver, some rare earths as well. From the foreign investors' perspective, again, there's a few challenges. They're not entirely familiar with the regulatory environment there, but a lot of that can be placated by looking into, again, the foreign investment treaties to secure some comfort as to the long-term investments. Otherwise, closer to home, as it were for you, Malaysia, huge tin and rare earth opportunity there. There is some questions over the need for increased transparency. Otherwise, India, fantastic strategic location. Coal reserves are very, very large, but again, we'll come back to coal later. It's not exactly the flavor of the month. Otherwise, iron ore and bauxite. So, and without stealing Ali's thunder, Mongolia as well. And perhaps I leave Ali to sing the praises of Mongolia, because again, another very resource-rich state, which is in a prime location to take advantage of the growing energy transition.
Yeah, well, and thanks for that, and the segue into Mongolia and Ali, who I was going to ask him to address that. And Mongolia's had huge promise for many years for foreign investors. Probably the last 2 decades, it's been viewed as a real great potential opportunity. But I would highlight that there's been regulatory issues, disputes between Rio Tinto and Mongolian government around OT and the investment agreement there. They've tried the Tavan Tolgoi IPO at least twice, and that's never materialized. So just, Ali, your perspectives on Mongolia, challenges, opportunities, and kind of how do you sort of see the environment there and the path forward to really attracting serious investment again into Mongolia?
Absolutely, thanks, Greg. Mongolia is a country in which you rightly pointed out has had its challenges with respect to Oyu Tolgoi and the like over the last 20 years. Those investments were rather vast, and they were a big chunk of the governmental GDP. Given the fact that you go in as an equity partner, you have to wait until you sow the seed and ultimately reap the rewards. These projects took a big chunk out of the GDP of the country, and as a result, people got uneasy as to whether or not they were getting a return on their investment. And on that basis, the government had to change tone a number of different ways in order to support what the locals were feeling with respect to that investment. We believe beyond Oyu Tolgoi, we've seen a number of successes in country since then. Oyu Tolgoi continues to be a legal tussle between the government and Rio and the like. But beyond that, we've seen the likes of Steppe Gold, for instance, going public and ultimately becoming a producer in the midst of a pandemic. Ion Energy, much the same. We've been able to execute on our promises of both acquiring licenses as well as moving on to exploration. So we're seeing a different sort of shift in terms of the way the government is approaching global mining investors. We know that as a country, Mongolia has only been explored for about 3% of the total landmass. It is very resource rich. And the government's now realizing that mining will be a massive contributor to their GDP. The skilled labor force in country echoes that very fact. And we're finding more and more that the government, having seen the government change in two different ways over the last 3 or 4 years from one political party to the next, each political party has been telling us the exact same thing, which is we're open for business. We'd like to ensure that we have full transparency. We'd like to ensure that you have an ability to execute. And they are very supportive of everything that we've seen so far. So I think let's not make Oyu Tolgoi the poster child for Mongolia. It is a big project and it did involve vast sums of money. But I think it's time as an investment community that we'd start to look past that and look at the other successes that have taken place in country.
Good observation. And obviously you involved with Steppe Gold, that's been a real great success story. So congratulations with that. Just to continue with you, an obvious topic or question is battery metals, the whole thing around energy transition and how that's going to be impacting markets. You're obviously in the lithium business, which is a big part of that. Maybe you can kind of give us some of your perspectives on opportunities with respect to those specific metals. Obviously you're in Mongolia, so you can comment on those, but elsewhere in Asia, be interested in your views on the opportunities in what I'll just describe as battery metals in Asia.
Certainly. I think lithium in Mongolia, we are first movers, rightly pointed out. We are looking at brine assets that neighbor or very close to the border with China. They would mirror very much what you would find in the lithium triangle in that they are endoheric basins. Those basins would contain a brine aquifer and they are still very early stage. But having seen really good grade near surface, that excited us enough to take on these licenses and move on with the exploration program. Now, battery metals in Asia, a very hot topic, not only in Asia, but internationally as well. The fact that we have licenses that neighbor the largest consumer on the planet, that being China, makes us quite attractive to obviously the Chinese in terms of their investment portfolio and capabilities. But ultimately, Mongolia has now what they're calling a third neighbor policy. And I know we're going to touch on this in a few other questions, but I think it's important to note that while China borders Mongolia and China are the largest trade partners, the ability of Mongolia to export its lithium or potential lithium to other countries in Asia is quite vast. Of the other producing sort of lithium assets that we know of in that region, the Chinese side of the border near the Qinghai Lake have a number of different brine projects that are currently producing with quite high impurities. So it's still very early days, in our opinion, with respect to finding good quality lithium in the Eurasian region. And we're hoping to be one of those companies that's able to bring good quality with low purity to market.
Great. Thank you for that. Edward, Indonesia's got a lot of attention over the last little while just on its position with respect to nickel in particular and how it could be a very important source of supply for battery materials, battery metals. Tesla was got in the news for potentially working with the Indonesian government or Indonesian groups on developing more nickel supply. How does Indonesia fit into all of this with respect to development of EV metal deposits and supply chains? Edward, I think you're on mute still. Edward, I'm sorry. I think you took yourself off mute and then put yourself back on. There you are. We hear you now.
All right. Little challenge. So of the 4 elements that go into the battery metals, Indonesia possesses 3 of them. nickel, cobalt, manganese. What it doesn't possess is lithium. So it's well positioned in the battery materials production, and many recognize that. You've heard and written about Tesla positioning itself here for production. Hyundai has indicated that it's looking at an $8 billion investment into the EV production. LG has also here, and we have from the mining and petrochemical side, state-owned China companies who currently have about $16 billion invested in this space and are looking to double that to $35 billion over the next several years. So there's a lot of focus and excitement around this space. The Jokowi administration has indicated and has put in place strategies whereby it wants to see Indonesia dominate EV auto production. At least 25% of that production will go back into the economy here. And of course, Indonesia is well positioned for exporting any finished product of battery materials to Asia. So again, Indonesia is well positioned. The challenges, though, has been, and many of you know this, is anytime you begin to run into the regulatory issues and ESG issues. And this will continue to be a focus, particularly of other investors, as to how is Indonesia in the position to either address the environmental, social, and governance issues with regards to investment in this space. Is it going to be covenant light? Is it going to be light touch? Is it going to be heavy-handed? And I think it's really, at the end of the day, if you look at how all the minerals and production in this country go, and the fact that we're finally moving from banning raw material exports to value-added production, I think it'll be a key element for investors to take a look at as to how Indonesia plans to address, for example, tailings, which has become an issue raised by many at this point in time, particularly institutional investors looking to participate in this space, in addition to any sort of corporate and brand risk associated with companies who are taking the end product to market, and that sourcing and traceability of those minerals and how they were mined.
Okay, no, great. Thanks for that. That's very insightful as well. Jason, EMR, you've focused on a couple of commodities. Copper's obviously a big one, and that's going to be a big part of the whole, renewable energy development. How do you kind of think of other EV metal opportunities and Asia? Is that something you guys see yourself pivoting towards, or how do you view that?
Oh, thanks, Greg. It's very much on the radar. We focus on copper and gold and potash, amongst a few other commodities, but certainly given the demand now for the raw materials relevant to batteries and EV, it's something that we do spend a bit of time on. I should say, copper, of course, is a key ingredient for EVs, and currently we've got copper and cobalt in two of our big operations, one in Australia and one in Zambia. Certainly, we love to get more copper and cobalt in this part of the world. But copper, of course, if you look at an electric vehicle, then it's going to use a lot more copper than the traditional, combustion fuel vehicle. So for now, we are playing the EV theme through copper. And if you look at copper, then you can't ignore most parts of Asia, including Mongolia. Very, very interesting. But certainly nickel is something that we do look at, and I think to Edward's point, Indonesia, key country for nickel. We're looking at things down there. Certain types of nickel will be of interest. And of course, Australia towards the south of Asia, I should say, is something that we're also looking very carefully at. We haven't done that much on lithium. I think there are a lot of experts in this group on lithium, and but it is relevant. But for now, copper, cobalt, nickel are the three things that we're spending a bit more time in. And we are, I think, very fortunate to be in this part of the world that we can find pockets of those materials in a number of Asian countries.
Great, thanks for that. John, why don't I ask you to get in on this discussion? And my question for you is, again, somewhat related to this. How is energy transition and the growth in renewable energy infrastructure impacting the mining industry in Asia? And who in Asia wins and who loses as a result of these trends?
Good question, and you could probably spend an entire day on it. In essence, though, all energy transition roads lead to mining. Now, whether you want to generate, transmit, or store low carbon or no carbon energy, you need metals, whether we're talking aluminium, cobalt, copper, lithium, the common metals. And a lot of this is policy driven by the governments, and there's a lot of fast developing policy by governments regionally and also further afield. Everybody obviously geared towards sustainable futures. Difficulty is a number of the policies are strong in assertions and limited in substance. For example, we've got the Chinese recent 5-year plan that's come out. It's given very little detail on how China would meet certain of its goals. That said, the amount of investment that we're seeing going towards the renewables and the energy transition in the region is incredible. 600 billion globally, 200 billion alone for China. We also have consumer demand, which is driving a lot of the energy transition. But the financial impact is APAC itself drew about 115 billion in renewable investments in 2016. It's now expected to draw up to about 250 billion more leading into 2025. So there's huge opportunities for the region, but it is a challenge, primarily because a lot of the Asian countries have for many years been in manufacturing and dependent on fossil fuels to provide the energy. So the transition out of coal in particular is going to be a long, complex process, and it's going to be very, very challenging. EVs are the way, of course. There's a lot of emphasis in government policies on that. But there's going to be a lacuna in the sense that there's a very big drive for energy transition, but the renewables are simply not at a level where they're going to be able to provide sufficient load levels. So who wins, who loses? Difficult question to define. It depends on how you define winning and losing. You could draw reference from the Paris Climate Agreement and look as to how various countries are performing. Difficulty with that is the metrics that are used for that tend to vary a little, and also you're not playing with a level playing field in the sense different countries have different levels of wealth, resources, energy demands, infrastructure. Otherwise, where do you see some of the winners and the losers in respect of commodities? Well, again, anything renewable is flavour of the month. Aluminium, copper, cobalt, nickel and lithium for the reasons we've already touched upon. I think one thing I could say with some confidence is that perhaps the biggest loser of the energy transition is, of course, thermal coal. And there's a number of states within the region that are very big producers of it. So they look like they're going to suffer the most in the midterm and longer term.
Yeah, no, that's an interesting observation, and one I was saving a question for Edward on that. How do you sort of see Indonesia transitioning into kind of a more low carbon world, given the size of the thermal coal production and that being such a big business there?
Well, funny you should mention that, because it's been, let's see, about 13 years ago, I put together the country strategy for, at that time, President Yudhoyono on Indonesia's pathway to low carbon economy. And here we are today having that discussion and still relevant. Thermal coal will continue in Indonesia, but it will be mostly for supplying the existing thermal coal power plants that have already been built and operational. One of the challenges with that has been, what do companies providing that thermal coal do? And you're beginning to see them diversify and consolidate within this space. For example, Adaro, Bumi, Nakatabang, and others have diversified into the low carbon or nickel battery mining and production. So those firms are looking at that transition while they continue to provide the thermal coal to existing power plants. I think that will continue. For investment opportunities, given that most institutional investors, because of ESG issues, are not allowed to invest or finance thermal coal in Indonesia, most of that relies on state-owned banks providing working capital and other finance facilities. But there's also opportunity for private equity to come in and participate in that. I would say, if I were doing that, I would be looking at what is the overall diversification plan of that company into the low carbon aspects of the economy. So that's one aspect. The other, though, that's not being addressed, and John's comments, I think, were quite relevant, is we look at the climate change accords as more aspirational rather than really rooted in any fundamental understanding on how these industries work. For example, if you look at the nickel industry and just the whole petrochemical side of it, the amount of power demand to run these smelters, and Indonesia is going to build 30 new smelters over the next 2 years, is enormous. This is not going to be powered by windmills and solar farms and batteries. You're still going to have a large degree of thermal coal powering that. And one of the things that Indonesia is looking at too is harnessing its renewables, particularly in hydropower and geothermal, which is completely underrepresented in the whole energy mix here. So that provides potential opportunity for Indonesia in this space to look at a low carbon pathway. But at the end of the day, the demand for EV battery materials is going to increase from, well, Indonesia can produce right now 100,000 metric tons a year to 1.3 million over the next several years. How do you get that uplift without more usage of fossil fuels? So this is a real challenge in that regards. And I think to your question, thermal coal will be around for the next, say, 20 years. But if you look at the energy mix of where this is going, gradually, they had to pick one fossil fuel to eliminate from the mix over the next 25 years. Thermal coal was the poster child. We'll begin to look at other fossil fuels that will begin to be a smaller contribution to the overall energy mix. I would say we should be looking at more at the micro reactor level of nuclear power, which I think will offset a lot of the demands if we're looking at the production and scalability within the EV battery market.
Okay, no, that's great. Thank you. That's very very interesting comments on the transition. I don't think we're gonna have time for too many more questions. Get a couple more in. I want to change a little bit of tack and ask Jason a specific question. You're a private equity firm. Your model is focused on trying to maximize returns for your investors. You often need to use leverage to do that. I think you've employed that successfully in a number of your acquisitions and investments. How do you kind of see leverage working for the private equity model in mining, particularly in emerging Asia, not so much Australia, but countries where it's a little tougher to get credit against assets?
Thanks, Greg. Look, there's no one size fits all in this sort of credit space, and the country sovereign risk is obviously a key factor. Using Indonesia again as an example because it's so relevant to mining. In fact, after all, it's one of the richest countries in terms of commodities and raw materials. So you can't really ignore Indonesia at all. But certainly our experience in Indonesia has been that a lot of interest, not just from the capital markets, but also from the banks. All the major banks are there, and a lot of the projects there, which are of high quality, are all very bankable. So you do get a very strong appetite by banks, financiers, credit funds to deploy money into the Indonesian mining sector. Certainly that's been our experience, and on very good terms. So, if used as a proxy, actually, a lot of interest and continuing interest, from banks, traditional banks, but also new entrants to the game. Naturally, in mining, in any situation, you're going to be, careful with leverage, and countries, different countries that have different types of credit limitations and currency controls, which, you do have to plan around. But certainly, if you look at the countries where we've had experience and good experience, whether it's Indochina, that's Cambodia and Laos, or whether you look at in Indonesia and even Philippines, there are good appetite, given that banks typically look for good projects and good operators. So we haven't had too many issues, Greg, from that perspective. Lots of good support, lots of good partnership, and we've moved on to partner with those same banks in other countries in the region. So I think I'm happy to report that lot of appetite and lot of interest from the sector in those countries.
That's great to hear. Great to hear. I think we're going to have time for certainly one more question, and it's kind of a very kind of global macro type of question. And maybe I'll ask Ali to start, given comments about Mongolia, connectivity to China. As a lot of Western companies have kind of exited Asia, or certainly de-emphasized Asia, there seems to be a bit of investment vacuum that's being filled by Chinese groups. So, Indonesia is a good example. Mongolia would be an obvious spot given the proximity. Do you see that happening? Like Asia for foreign investment into the sector is really becoming, the space for Chinese groups, and foreign investors are shying away, or how do you see that dynamic evolving over the next couple of years?
I think, specifically to battery metals, metals that are being deemed of strategic importance by governments around the world, we're finding that starting to change quite slowly, but it is in fact happening. While the Chinese government and the Chinese entities that we would be, as I mentioned earlier, primary sort of acquirers or JV partners for any sort of lithium found in Mongolia, Mongolia has instituted, and I'll keep my focus to Mongolia given that's my expertise, but Mongolia has instituted what's called a third neighbor policy. Given they are sandwiched between Russia and China, they're developing sort of tax breaks and benefits for individuals or entities that would want to operate with companies or countries outside of those two countries. On the back of that, you've had the likes of Narendra Modi, the Prime Minister of India, visit Mongolia not too long ago to sign trade agreements. India being about 10 years behind China in terms of battery manufacturing, they obviously want to secure their supply of lithium, and what better place to do so. Beyond that, if we're looking at the West, Pompeo, during Trump's administration, was there for very similar purposes. The German government has a trade agreement with Mongolia as well. So I think we're starting to see, based on government influence, investors from the West returning to Asia. And for them to be doing so in a country like Mongolia is indicative of this change that we're seeing with respect to the appetite to invest in country, as well as their stature as an investment opportunity worldwide.
Great, thank you for that. And why don't, John, I'll give you the last word on this topic, and then I think we'll need to wrap it up. How do you see investment flows into Asia? Is it really going to be dominated by China, or we're going to see a revival of Western investment into the sector?
We're going to see a bit of a mix, Greg. On the ongoing trade wars, whether we're talking with respect to Australia or America, obviously that's tempered outbound investment for the Chinese into those markets. And a lot of that is fueled by the respective countries, redefining what are strategic assets. It's no longer limited to, for example, military infrastructure. The likes of Australia and the US have identified natural resources are indeed strategic assets, and their respective regulatory bodies, whether it's FIRB in Australia or CFIUS in the US, has started to very much scrutinise the investment coming from China and a number of other countries. So Chinese money we see still going into the Asian region and also into Africa. As for Western investors, still a huge appetite I'm seeing among a number of my clients who are very, very interested in opportunities in Asia, likewise in Africa. I think they're seeing that the emerging markets, there's still opportunities to make some good discoveries and make a good profit on some projects. So I don't see Chinese money as strictly limited to Asia or Africa for that matter. It is still looking towards the Western markets. But as I said, it's been tempered a little by the regulatory changes we've seen recently. But still huge opportunities in Asia for foreign investment to come in.
Okay, well, thank you for that, and that's very encouraging. I think we're have run our 40 minutes, so we'll need to wrap up. I just want to say thanks to Jason, Edward, John, Ali for a really great discussion. Hopefully, people who participated found it interesting. And thanks to Minds and Money for giving us an opportunity to participate in this event. Thanks, everyone, and have a good day.
Thank you.